Hello student, in today's class we will going to deal with new chapter which is very interesting, that is loans and advances. First we'll see what is this loans followed by advances, and then we'll move on to lending of funds. Now let us see what is this loans. Loan is a money given to another party in exchange for repayment of the loan, that is principal amount plus interest. Loan terms are agreed by each party before any money is advanced. Or we can also say a loan is a sum of money that one or more individuals or companies borrow from banks or other financial institutions so as to financially manage planned or unplanned events, and in doing so the borrower incurs a debt which he has to pay back with interest and within a given period of time. Then the recipient and the lender must agree on the terms of loan. Student, in some cases the lender requires the borrower to offer an assets as an collateral. So I can see here loan also can be given to corporations and government. And the main idea behind taking out loan is to get funds to grow one's overall money supply. And of course, the interest and fees serve as a source of revenue for the lender. Right? Lender meaning we are talking about the banks. The amount of lender, which he will going to lend to the borrower for a specific purpose like the construction of the building, capital requirement, purchase of machinery and so on for a particular period of time, that is actually known as a loan. Now if I want to say in general, like loans are granted by banks and financial institution, I also can say it is an obligation which needs to be repaid back after the expiry of stipulated period, right? The loan carries an interest rate on the debt advance. Now student, as I already told you all, before advancing loans, the lending institution checks the credit report of the customer. And why they check the credit report of the customer? To know about his creditability, financial position and capacity to pay. So therefore I can say here is loan is classified in the following categories. Now let us see loan is classified into which are those categories. As far as security is concerned, on the basis of security we can say there are secured loan and unsecured loan. Now, what is this secured loan? The loan which is backed by securities is secured loan, right? Then what is this unsecured loan? The loan on which no assets is pledged as security is unsecured loan. That is on the basis of security. Now we will see loans on the basis of repayment. Under this we have demand loan, time loan and installment loan. Now let us take one by one. What is this demand loan? The loan which is repaid on demand of the lender is demand loan. Then the loan which is repaid in full at a future, that is specified date, is time loan. And let us see the installment loan. Loans which are to be repaid in evenly distributed monthly installment is installment loan. Okay. Now what are the purposes? Why people or customer take loan? What are the reasons? What are the purposes? What type of loans they opt for? Like we have on the basis of purpose, home loan, car loan, education loan, commercial loan, industrial loan and so on. That was introduction on loans. Now we'll move on to introduction of advances. Okay, what is this advances means? Advances are the source of finance which is provided by the banks to the companies to meet short-term financial requirement. We can say it is a credit facility which should be repaid within 1 year as per the terms, conditions and norms issued by Reserve Bank of India for lending and also by the schemes of the concerned bank. They are granted against securities, okay, and which are those securities? Let us see. We have primary security, collateral security and guarantees. Primary security is hypothecation of debtors, stock, pronotes and so on. Collateral security, mortgage of land, building, machinery and so on. Guarantees given by partners, directors or promoters and so on. Now student, let us move on to the forms of bank advances. Which are the different forms, types of bank advances? Okay, we can see short-term loans under this as one of the form of bank advance. Then second is we have overdraft, then followed by cash credit, and next is bills purchased. Okay, now we'll see one by one what is this. Short-term loans, advance in which the entire amount is provided to the borrower at one time. That is one of the forms of bank advance. Second is overdraft, also known as OD facility, as I already told you all. A facility provided by the bank in which the customer can overdraw money from his account, okay, to a specified limit. That is something about overdraft. Moving on to CC, that is cash credit, a facility granted by the bank in which the customer can advance money up to a certain limit against the assets pledged. and followed by bills purchased, an advance facility provided by the bank against the security of bills, right? So that was something about advances. Now we have seen the introduction on loans and advances. Now moving on to lending of funds. Lending of funds is one of the primary function of a bank. The majority of the deposits accepted by banks are utilized for lending to trade, commerce, industry, agriculture and the priority sectors depending on their requirements. Right? Now, bank lending may take one of the following forms. Which are those following forms? Like loans, overdraft, cash creditors, okay, or cash credit, discounting, bill of exchange. Okay, as we have already discussed. Now, while the banker may decide on the type of advance, period of advance and amount to be advanced, his first priority should be safety of the funds. As a banker, he has to remember that he is lending out of the deposit he or she has collected from various depositors. He is also answerable to the depositors. That banker has to keep in mind. Now, in view of this, he should look at safety, liquidity and profitability of the advance. Similarly, he should judge the character of the borrower, his capacity to undertake business and repay the amount, and his own contribution of capital to the business. Now for this, the banker may accept securities which are used only when the borrower fails to repay the loan and interest. These securities may be in form of land, building, plant and machinery, stock of goods, insurance policies, shares, debentures or any other valuable security. Okay, that was something on lending of funds. I hope introduction on loans and advances as well as lending of funds is clear.